Pan American Silver is one of the largest global primary silver producers and a sizable gold miner, with operations in North, Central, and South America since 1994. It currently owns 10 producing mines, as well as the suspended top-tier Escobal silver mine and a number of large-scale advanced exploration and development assets. The diversified portfolio provides both scale and upside optionality. The company is listed on both the Toronto Stock Exchange and the New York Stock Exchange, with a market capitalization of over $22 billion. Here are 5 key reasons why Pan American represents an interesting investment proposition. Pan American's flagship silver operation is the La Colorada mine in Mexico. It boasts 91 million ounces in contained silver reserves, producing silver-rich lead and zinc concentrates at a rate of approximately 2,000 tons per day. Recent strong exploration results indicated multiple high-grade intercepts along and below the strike of the known vein system, resulting in the addition of 53 million ounces of silver to inferred mineral resources. In the gold segment, the Jacobina mine in Brazil is a large-scale, low-cost, long-life operation with 3.1 million ounces in contained gold reserves and significant exploration upside. A comprehensive study on the project is currently being undertaken by the company to optimize its long-term economics and increase output. The company offers exceptional exposure to silver thanks to its well-diversified asset base and significant long-term growth optionality through the La Colorada Skarn, Escobal, and Navidad projects. La Colorada Skarn is a large, silver-bearing polymetallic deposit discovered by the company in 2018 through brownfield exploration near the existing La Colorada mine. Containing more than 300 million tons in total mineral resources, it is envisaged to produce large quantities of silver, zinc, and lead for decades. The recent exploration results at the adjacent La Colorada mine present exciting opportunities for development, and the company is currently evaluating a 2-stage development approach for the Skarn project. This approach would reduce capital intensity and accelerate a substantial increase in silver production relative to the initial preliminary economic assessment released in January 2024. A revised PEA incorporating this new development pathway is planned for the second quarter of 2026. Concurrently, the company is discussing partnership arrangements for the development of the project. Pan American has grown significantly over the years, actively managing its asset portfolio to maximize shareholder returns through value-accretive acquisitions and by focusing on its most profitable and long-life operations. The company's transformative deals include Tahoe Resources in 2019 and Yamana Gold's South American assets in 2023. Both transactions were well-timed and closely aligned with commodity cycles, allowing the company to significantly increase its exposure to gold to take advantage of rising metal prices. At the same time, Pan American divested non-core assets, directing a portion of the proceeds to enhancing the company's exposure to silver with the acquisition of the world-class Juanicipio silver mine. The company's most recent transaction to acquire MAG Silver was similarly well-timed, as it was executed on the cusp of another significant step change in silver and gold prices. MAG's key asset is a 44% interest in the large-scale, high-grade Juanicipio mine in Mexico, commissioned in 2023 and operated by Fresnillo. The acquisition is set to boost the company's exposure to silver, increasing silver production by approximately 30% while visibly lowering its consolidated silver costs. Juanicipio is a highly cash-generative operation, with reported EBITDA of $279 million in the first half of the year. The mine is located in one of the most prolific silver districts in the world, and significant exploration potential exists to extend known silver mineral reserves. Pan American reported strong third-quarter results, driven by favorable commodity prices and the initial one-month contribution from Juanicipio, with record EBITDA of $406 million and attributable operating cash flow of $324 million. The silver segment all-in sustaining cost was down 22% on the previous quarter, to an impressive $15.43 per ounce, in large part thanks to the strong cost performance at Juanicipio, which saw a negative all-in sustaining cost of $7.3 per ounce. Adjusted EPS grew 12% to 48 cents, and the company declared a quarterly dividend of 14 cents per share, up from 12 cents in the second quarter. It also revised its FY25 guidance for attributable silver production up to 22 to 22.5 million ounces, and all-in sustaining costs down to $14.5 to $16.0 per ounce on the Juanicipio contribution. Gold production guidance remains at 735 to 800,000 ounces. Consensus expectations for the company are pointing to a stellar financial performance this year, with EBITDA rising by approximately 50% to $1.7 billion, and operating cash flows improving 70% to $1.3 billion. Market expectations remain very positive for FY26, with consensus EBITDA estimated to reach $2.7 billion. The stock was up 156% in 2025, which still puts it on an undemanding enterprise value to EBITDA multiple of 8.6 times for 2026. The company's strong financial and share price performance is driven by the record-breaking silver and gold prices, improving operational momentum, and M&A. The company maintains a robust liquidity position, with a consensus forecast of about $600 million of net cash at end 2025. Pan American consistently distributes cash via regular dividend payments and share buybacks. Since 2010, it has returned over $1.2 billion to shareholders. Pan American Silver offers investors exposure to silver and gold through a diversified portfolio and a strong track record of creating value for shareholders. If you would like to learn more about Pan American Silver, please visit the Edison Group website.